Hey everybody, Economic Ninja here. I want to do a continuation video about a video that quite frankly is my most watched video ever. It's crossed 600,000 views in the first week and a half, and I wanted to put it out, and I think it's a big deal because a lot of people are going to be caught by surprise. Now I want to address some comments in the comment section below where in that video people are going, no, this only affects you if you're a business owner, this whole new 1099 reporting that's coming in 2022. It's already started for anybody receiving $600 or more in the entire year. If it's under the goods and services tab or section of any payment app like PayPal, Zelle, Venmo, things like that, eBay. If you receive payments from somebody and it equals $600 or more, you are going to get issued a 1099, and that is between, or 1099K, I apologize, and that will be between you and the IRS to prove that you have a business or not. And I believe it's going to bring a lot of people a lot of stress and frustration, so I wanted to get this out as soon as possible. Now, with that said, if you have been I'm trying to bring the best information to help save you guys before a collapse, but also just common sense financial information that I wish I would have had when I was starting out on my journey to become a millionaire or a multimillionaire, and I really want to bring the best value. So with that being said, if you believe I brought value in that video and you have not subscribed yet, can you please consider subscribing? It definitely helps me out on my mission and my goals. And with that being said, we're going to go through this article, and I'm going to show you some things. I'm going to actually put this article, it's out of BloombergTax.com, in the description so you guys can look it over. We're going to briefly go over it, okay? But this is to talk to the naysayers that think this is not going to affect them, and I believe it's going to really affect you, even if you're selling stuff at a garage sale and someone pays you, and if it's under the wrong category, it's going to trigger that 1099. So here we go. Beginning the tax year 2022, individuals, okay, that's important, partnerships, LLCs, and corporations that earn more than $600 through various online venues. Various. That's another thing people have been saying. Oh, it's only, I'll give you an example. One person in the comment section said, I talked to 2 CPAs about your video, and they said it only affects Venmo and PayPal. Okay, that is 100% false. It says through various online venues, and we're going to get to that, we'll start receiving a Form 1099-K. Payment card and third-party network transactions on which that income will be reported to themselves and the IRS. This change will substantially increase the number of 1099-Ks required to be filed with the IRS and furnished to recipients in early 2023. That's why, and please guys, I believe this is so vital. It's going to save so many people so much heartache. Please share this everywhere on the internet, this video, and especially share it on Facebook. Those Facebook groups where it's how to make money from home, the garage sale groups, things like that, people need to be aware of this. And I'm going to link my first video to this video so you guys can get the best. If you can share either of them, whichever one you believe is best, I seriously think this is going to save so many people a lot of heartache, okay? Because I believe the burden is going to be on you to prove to the IRS that you don't own a business. And if you're doing a lot of garage selling and selling things on the side, or you just want to liquidate your house and just, you're moving out of state, and you all of a sudden see, $8,000, $10,000 over a few month period accepted in payments, electronic payments, and you get this 1099, just know that there is issuing, that payment company is also issuing a 1099 to the IRS, okay? So it says, traditionally merchants have received a Form 1099-K reporting their gross proceeds from credit card transactions. However, for 2021 and prior years, payments made through various marketplaces and payment processors, third-party settlement organizations, and those stand for TPSOs, that connect buyers and sellers, they had a rule. It said they were subject to reporting when the amount paid to a single payee, i.e. you, during a calendar year exceeded $20,000, and the aggregate number of transactions with that payee during the calendar year exceeded 200 transactions. Okay, so to go from 200 transactions and $20,000 a year to just a pure $600 a year is a massive change. Okay, and so many people are going to get smacked with this. I cannot be more serious. Another thing that a lot of people have said is they said in the comment section, well, it's I'm selling my own stuff. Well, the problem is the IRS doesn't know that, because if you use, let's say, Venmo, What happens is Venmo doesn't know. They just know that you've accepted money from someone. And if you accepted it under the wrong category, i.e. goods or services, it's going to trigger that 1099. Now, another thing too, it says, now as a result of a provision in the American Rescue Plan Act of 2021, if a TPSO or electronic payment facilitator makes payments totaling more than $600 in a calendar year to a payee, it will be required to report those payments on a Form 1099-K. Now, something else I want to explain to you guys that I think is extremely important. A lot of people also said, wasn't this in some older bill that didn't get passed? And what I believe a lot of people are confusing is that there was some legislation in a bill just recently that the IRS was trying to get banks to report anytime you moved $600 or more inside of a banking cycle, which is usually your statement cycle dates, and that got knocked down. Okay, so I think people are getting very confused, and I have a weird feeling that's the reason why it was all this 600s to really throw you off, because this is going to catch a lot of people by surprise. Again, please consider, if you think this is good information that I'm warning you guys with, subscribing to the channel, hitting the thumbs up button, and sharing this video. That helps a lot. It's one thing for us to be warned and do something about it. It's another thing if we help warn others. Good things come back to us. When we help others, good things come back. All right, so here we go. Who is required to report? A TPSO must report payments made through a third-party network. A third-party payment network is an agreement or arrangement that involves the establishment of accounts with a central organization. Let's put it this way. Really easy thing. TPSO is like Venmo, Zelle, PayPal, eBay, any of these third-party apps that take in money from one party and send it to another party, and then they charge a fee. Okay, so just about anybody out there is every company out there that does this is going to be under this new rule. Okay, so it says who will receive Form 1099-K in the future. Now check this out. Think about this, guys. A lot of people said this in the comment section. Homeowners who rent out their vacation properties through a marketplace typically do not receive a Form 1099 under the existing rules because they do not meet the 200 transactions per year threshold, right? Because they usually collect monthly rents and there's only 12 months in a year, so they're not getting that. Similarly, okay, the ninja can't read very well. Sellers of collectibles on the internet rarely meet the threshold. Likewise, many individuals who seek to earn extra cash via online websites by making deliveries, cleaning houses, babysitting, or performing other services frequently do not earn more than $20,000 during a calendar year. Okay, now I want you to listen to this because a lot of people said that what I was sharing with them is not true. It's not happening. However, it says, under the new law, these property owners and gig workers will now receive 2022 forms 1099-K reporting their extra income in January 2023 if that income in 2022 exceeds 600. Now I want to break here, and we're going to give the rental scenario as an example. You could tell one of the questions from a subscriber was, well, wait a minute, what if he was asking the question, you could tell it was one of those, they're going to know how much I take in rent. And I go, yeah, they're going to know. So you better be really careful with how much you claim as rental income. If you are falsifying your documents as far as, how much you take in rent because you're using one of these apps, and you submit your tax returns and you say, and guys, first off, this isn't tax advice. I'm not a tax professional, but I read a lot of tax books, and I'm an entrepreneur and I'm an investor of 21 years now, 22 years. And so don't take this as tax advice. Go listen to a tax guy. But I'm pretty sure he's going to agree. We'll play this part of the video for him. If you file a tax return saying that you took in, let's say, $10,000 in 1 year in rent from one property, but that payment app now sends out a 1099 to you, to you and the IRS, but it shows that you took in $15,000, there's going to be a problem. that could set off a red flag. It could cause more problems. Now, do I believe that the IRS is going to audit everybody? Nope, don't believe that. But would I prepare and do everything right and legit and use legal tax write-offs? Yes, I would. And there's tons of them out there. And I want to start bringing many of them to you guys in the next few months. I think it's very vital that people learn how to use the tax code to pay very little rent or very little tax or no tax, okay? So I want to get that very clear through everybody. This is a big deal, okay? It is going to affect everybody. It says, now these forms, this is another question a lot of people ask about, especially garage sales. These Form 1099-Ks will not reflect the various deductible expenses associated with the extra income, such as utilities, depreciation for homeowners, basis in property sold by sellers, or the cost of mileage for delivery drivers. All right, I'm going to stop right there because I want you guys to read through this. There's so much great information in this article, okay? A lot of people say, well, what, am I going to have to show a cost basis for my garage sale? Well, I'll tell you this. If it is sent as a 1099-K and you're selling enough, you may have to, quite frankly. And I want people to realize how big of a deal this is. Again, that's why I want people to share this video, get it out. I really appreciate all of the new subscribers. I have tried in the last year to grow something called Ninja Nation, an army of human beings worldwide that are prepared and not scared, that understand economic cycles, or they might not right now, but they are learning from this channel and others that I'm working with to show you how to not only survive, but thrive. And this next collapse in the economy, completely take it by the you-know-whats. Do not put that in the comment section. Now, here you go. This is what I'm going to close with, okay? Because I don't want it to have the video go so long. It is important to note that transactions for personal gifts, charitable contributions, and reimbursements are specifically excluded from the Form 1099-K reporting. I want you to really concentrate on that part. If you made it to the end of the video, this is the most important part, okay? Because remember, it's all about how it is selected in these apps. So I don't want you to, all of a sudden trigger a 1099 and then you have to explain to the IRS or write some document saying, look, I was giving to my church or a charity, or I was giving a gift to somebody that needed money, things like that, okay? Most TPSOs will likely attempt to identify such transactions based on their user agreements, which generally specify whether the user will be using the website for personal or commercial transactions. Okay, so I'm going to end it there, and I want to thank you for this time. We're going to be digging into this a little bit deeper, and I'm going to show you over the next couple months how, for a lot of people that have side hustles, to absolutely use this to crush it. This, I know it sounds crazy, but sometimes the worst things in your life become the greatest blessings. And I have a feeling there's a lot of people with some amazing side hustles out there that haven't taken that extra step to possibly putting that into like a small sole proprietorship and being able to use legal write-offs to absolutely crush it. Because every time you use a tax write-off and you pay less tax on something you would normally use in your normal life anyway, but also you're using it for business, it means you are putting money in your pocket, because a penny saved is a penny earned. Now, with that being said, guys, I thank you so much for watching. The Economic Ninja is done stuttering. I am out.